in my bag.
Just to do some things to try to hedge against inflation, right? So I think inflation right now, it's been fluctuating, I think, between 8.1% and 8.3%. As a matter of fact, I think the most recent one was 8.1%. They thought it was going to go down to 7.9%. And because it didn't go down those extra couple of percentage points, everybody got spooked or whatever. But ways to kind of mitigate that is to potentially do some alternate investing, or alternative investing. And so there's a few of them that I'm in. Like, for example, I use or I invest in Groundfloor, which is a short-term high yield investment. And what that pretty much is, it's a platform that allows you to lend money to people who are either trying to renovate homes, they're just trying to do some flips, rehabs. And so you can lend money based on, and they have different, when you go on the platform, they have like different types of loans all across the country. They have terms, and the reason why I said it's short-term high yield, because the terms can go anywhere from the least amount I've seen is like 5 months. The most I've seen them go out to, I think, is like 15 to 18 months. But you're able to get at a minimum 10% return on the money that you loan for this person to do.
That's not bad.
This
return.
Fix, flip, rehab, renovation. And so it's a real estate investing platform that allows you to make at least 10% off of your investment.
Okay.
So the ROI at a minimum is 10. I've seen some of them get as high as 15%. So I heavily put money into Groundfloor. As a matter of fact, I had this set up on a reoccurring investment. And so I go in twice a month and I select which projects I want to lend my money to. And they vary. Sometimes I do get the 10%, depending on what loans are out there that people are looking to receive money for. And sometimes I've been able to get or lend money on as high as 15%. And as I said, some of them are as short as five months. And so I get that money back. And what I continue to do is just keep reinvesting it.
Mm-hmm.
So overall, you wind up with, your average rate of return, as long as it's above 10%, you're beating inflation.
Right.
Another one that I use, which is Amazon backs it, or another one that I invest in is an Amazon backed platform. Mm-hmm. Again, this is just us talking about our investments and what we're doing. We don't have no affiliates. We're not trying to promote anyone. We're just throwing it out here that there are other alternative investments that are out there to diversify your portfolio. And so Amazon partnered with this company called Arrived Homes. They're actually a part of some companies that Amazon has worked with. And Arrived Homes is a platform that allows you to pretty much own shares of single family homes. They started out with single family homes. The homes are all across the country. They do the due diligence and they find the homes. They rent the spaces out for you, and you receive a dividend on the ownership shares of that home. I think it's a really good way to also, I've seen in rates of return as low as, I think I've seen some as low as like 5%. And I've also seen some where they predict that the rate of return could be as high as, I think the highest one I saw was like 12%. So again, just another way to beat the inflation. They recently released, they started like a couple weeks ago, where now you can actually own shares of vacation homes. So they just recently started populating vacation homes. So personally, I own some shares of some of the residential homes as well as some shares of the vacation homes on the Arrived Homes platform. I also have been really big on, we talked about this, Max, before. We talk about how do we start our own venture capital company, because I do think it's important to invest in small businesses and startups. Some of these companies who eventually wind up, having IPOs or becoming IPOs, which right now the whole IPO market has really slowed down. But I believe it's very important to get in early with some of these companies. And so there's a few companies that or let me back up. There's a few platforms that you can use that, a lot of these alternative investments, alternative investment companies are trying to make it a little easier for people to be able to get in with some of these startups. So I'm not in all of these. I'm naming some of them, but you got Start Engine, you have WeFunder, you have Micro Ventures, you have Seed Invest. There are so many of these kind of micro investment companies, if you will, that allow you to invest in early stage companies. Right. And where a lot of times we don't get the opportunity to do, especially if you don't know where to go or if you don't meet the threshold, right? Because you have accredited investors versus non-accredited investors, mm-hmm. right? And so accredited investors typically, I think, are people whose net worth is more than $200,000. Sometimes it fluctuates depending on the platform of what they would consider as an accredited investor, but for the most part, it goes upon your net worth. And then you have non-accredited investors, right? And depending on how much you make, they do the calculations to see how much you can actually invest as a non-accredited investor. But either way, it's still an opportunity for you to get in early, own some shares of a company that may actually wind up being the next DoorDash or Uber, right. Or, again, going back to the whole Google analogy that I gave earlier, the Tesla analogy and the Apple analogy as well. Sometimes you just don't know, right? And so if you have, and in my case, there are some companies that I have invested in because I did have money that I was willing to risk. And in these plays, for the most part, you're playing the long game anyway, right? You're playing the long game, saying, hey, I'm willing to put this money here because I believe, 5 years from now, 10 years from now, I'll get a return on my investment, right? So that's just some of the stuff that I'm doing so far as alternate investing. I was able to get in early on another investment, Dream Exchange. And so Dream Exchange, which is going to be the first minority owned or first Black owned stock exchange, which is going to be huge, I think. And so I was able to get in early with that a little while ago, a little over a year and a half ago. So hopefully that plays out, but I was fortunate enough to get in early with that. It doesn't happen that often. And I'm one of only 125 investors in a company.
Okay, that's good.
Yeah, so we'll see how that plays out. So that's good. I mean, we was able to kind of give a rundown on just some of the investments that we're in. There'll be more episodes where we'll talk about more in depth about some of the things that we're doing. And kind of give some updates too on some of the things we're doing so far as from an investment standpoint.